What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is August 9th of 2021. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, I want to spend some time to answer a question that I think is on the minds of a lot of people. Are we expecting a short-term correction for Bitcoin here anytime soon, as we've seen an over 55% rally in price over the past couple weeks? And outside of this as well, I want to spend some time to take a step back and analyze where we are within the current cycle. I know everyone's focusing on the day-to-day stuff when it comes to crypto, but I want to go ahead and give you guys a scope so we can have decent expectations for both time frames as well as percentage gain returns over the next coming months into the rest of this cycle. So let's go ahead and dive into the conversation, guys. So the first thing I want to talk about here is the over 55% move that we've made here in the sense of Bitcoin's price off the lows here around 29,000 all the way up here to $45,000. A really great move here in just 19 trading days. Absolutely phenomenal stuff. Now, I want to go ahead and again just emphasize my point here about, are we expecting some kind of correction? We did face some resistance at a pretty big even level, the $500,000 intervals. Those are levels we have to watch for. And we made some pretty big leaps and bounds, and 54% in 19 days ain't bad. So I want to go ahead and be very realistic with you all. Do I think that there's going to be some form of correction in Bitcoin? To be frank, I think the worst level you could possibly see is, again, holding around this $42,000 range. And the reason I'm so confident on that is because this is generally anywhere from 41 to 42,000, the range of previous resistance. And now Bitcoin is having an opportunity over the next coming days to come down and make this new support to be able to leapfrog higher. Because at that point, there really isn't much ranges of resistance until you get up here towards 59,000, 58,000, 65,000, 62,000. Again, you've got a nice room of range here in price where you don't have to worry about much. But I wouldn't just be analyzing Bitcoin here, right? Even though, again, we do see that Bitcoin played out. We had our lines. We still have them drawn here and stuff. We talked about these previous ranges of resistance acting as new support. And that's exactly what happened here. We came down the correction and made support there. I want to go ahead and actually point people's attention towards something else, which is total market cap. Because whether we like it or not, guys, no matter where your opinion stands, the crypto market is not just Bitcoin. Not anymore. And it hasn't been like that for some time. And a growing percentage of dominance over time is going to the altcoin space. So it's good to look at this total metric so we can see a broad overview. And this is what we do in equity markets or practically any other market. We look at indexes. We look at a measurement of a broad range of assets. If we take a look at total here, I think we've got exactly what we had on Bitcoin playing out here. Just like how back here, we were making previous ranges of resistance and that we might make this range of previous resistance new support, we also might have the same thing happening here. After an over 56% correction from the highs to the lows here, we can see, and I'll go ahead and just clear the chart so you guys can see here, we had many solidified points of resistance, these slightly lower highs, right? And I think what we've got an opportunity to do here is to potentially turn some of those points of previous resistance. You can see they're slightly descending. You can kind of be subjective with the line here, but put that aside, right? Put aside the subjectivity here, right? And depending on what way you want to draw it, generally a correction coming down here and holding this $1.6, $1.7 trillion range for total market cap. And again, with this, we need to bear in mind just the scale of valuation here. It's incredible to think that just in the past couple months, crypto's gone from around a $350 billion market cap back here in October of last year to here in August of 2021 at 1.75 trillion. And that's after a correction from up towards 2.5 to 2.6 trillion. But I want people to understand the big picture, and I want you guys to really, really think about this when you're investing in asset classes, or if you see another opportunity in equity markets, maybe Tesla stock is popping off, or you see various other different opportunities. There just aren't many markets out there that have the market to scale that crypto has. Not many emerging, exciting sectors as a whole make up a valuation of 1.75 trillion. That's a really, really small market in the grand scheme of things. When you're talking about the broader ranges of markets, you talk about equity markets, you're talking about over $100 trillion of wealth. If you're talking about, bonds and government treasuries, you're talking easily about $150 trillion, right? Major scaled markets. Even just gold and silver, if you want to compare it to commodities, you're talking about at least $14 trillion at current market rates for gold and silver, as well as maybe some other place like palladium. So we have to again bear in mind that this is not only the asset class that is most favorable with the next generation of millennials and Gen Z, as well as some other different traditional investors. And then we've got people from all different age groups who are in crypto. When we get discount opportunities like this, when we see pullbacks, when we see solidified support, we not only want to assume that we're likely going to reclaim the previous all-time highs, which alone is a great range of price gains from where we're at right now, nearly a 50% move, but that we're going to break to new all-time highs, that we're going to continue climbing higher. So let's go ahead and try to get some good assumptions here, right? And then we can take a look a little bit at the data science and take a look at some of the other large plays like Ethereum. So we can see here in the cycle back here from January 2015 when we set on the bottom of the market to the absolute height, right? We came from a market cap low of $2.12 billion for all of crypto as a whole, mainly Bitcoin at the time, all the way up to $761 billion, a 36,028% move. Massive, massive multiples, huge returns. Let's go ahead and think, though, with our mindset of expanding time frames and also consider that we're going to have much lower degrees of returns. It's decaying returns with each cycle. Cycles usually get longer from bottom to top, and they also don't return as much as they did in the earlier days because it's much easier to go from $1 million market cap to 100 million versus going from for example, a $1 trillion market cap to 10 trillion, right? It's varying degrees of multiples and returns, plus you have to consider the need for new liquidity to drive valuations that high. Let's go ahead and take probably what's the most conservative estimate here. If you're not convinced that we're in a bear market, right? If you're already convinced you're in a bear market, then you don't really care about the day-to-day analysis. Now you're waiting for an 80% correction. If you're on the page, though, that this is going to be a continuation here, that we're going to revisit back to those all-time highs, the most conservative range I could think about here to test for is probably around 3.3 trillion sometime by the end of this year. And the reason why is because that's literally 1/100th, right? Excuse me, I apologize. 1/10, not 1/100th. 1/10 of what we did last time within the same time frame. Even I can make mistakes, guys. 1/10 of what we saw last time. That's really not a big ask. And that's pretty common and aligned with the kind of decay in returns that we see from previous cycles, right? Because if you take Bitcoin from when it was like, before this cycle, we're looking at total market cap, so it only has metrics from here back since March of 2014. You'll see that if you got Bitcoin at a couple cents and then it went up to like $1,000 or even a couple $100, yeah, you're going to get even more insane multiples, right? So with each of these cycles, you're still getting fantastic returns, but it's a decaying amount of returns. Now, this is assuming that we do it within the same time frame. And historically speaking, when we analyze the logarithmic chart for Bitcoin, I'll just go ahead and pull it up here so you guys can see it. Right? We analyze the logarithmic chart for Bitcoin, we see that with each cycle, right, they tend to get longer from bottom to top, bottom to top, bottom to top, bottom to top. It gets a little bit longer as we go throughout the process with, again, decaying returns. So let's go ahead and talk about what might be a more optimistic scenario. A more optimistic scenario would be a little bit around 1/4 of what we did last time, right? Which is about 9,000% return from bottom to top. And from where we're at right now, to just get an assumption of where this might lead us, we're assuming that we might be able to see another 400% move across the board in cryptocurrencies from where we are right now in August of 2021 all the way to January of 2023. This would play perfectly aligned into what we've talked about in regards to the expanding cycle theory, that with each cycle, we're adding anywhere from around 11 to 13 months from the previous one. And that not only what we saw back in April at 65K was not the market top, but along with that as well, that we've got a good ways to go where we will probably not only have a nice parabolic rise up to 3 or 4K, maybe even to 5K, but we'll have another correction and then we'll come back up here for a euphoric peak. I think what's much more realistic, as with each cycle, we tend to see that the parabolic nature starts to really take off later on. I think what we could see very realistically is a break back above the previous all-time highs in valuation, maybe up to that 3.5 or $4 trillion market cap range. We have another correction, a bit of chop and valuation, and we start to really move higher here. And this is again the logarithmic chart we really start to move up and make that next leg up later on in 2022. But again, there's still great valuation gain here, so much so that I'm not interested in any other market. There's no other opportunity that I think is going to make these kind of returns. So why dilute yourself in other assets, or at least have your primary focus on those? If you're a trader, or if you're kind of a swing trader / investor like myself, I like to focus on a 6 month, 1 year, 2 year time frame about where is best to put my money, so I can not only benefit from long-term investment tax optimization, but outside of that, I can also still capture good opportunities without having to watch the charts 24/7, even though it is my job to watch the charts here with you guys, right? So these are just, again, some assumptions. And I forgot to mention the time frame here. The reason why I picked around 49 months is it's roughly around a third addition of the time frame it took from bottom to top here on top of the previous time frame, right? Just with one additional month, right? You would generally add 12 months in this case, which would lead you to 48. We just stretched it out here to 49 in this case, right? You could really be nitpicky about it, doesn't really matter. But around this time frame, sometime towards the end of 2022 to the beginning of 2023, right? And I want to go ahead and talk about, again, just some solidification about why I'm so confident that we're in a mid-cycle correction. So take a look at the stock to flow model. Again, not the only end-all be-all data science model, but what's really interesting about it is that we not only had a low model variance, just like we had in 2017, but we can see here as well that this is around the same color code that we saw before we saw the secondary parabolic wave of the cycle, right? We had the midpoint here around 2,000 for support, went all the way up here towards around 20,000. We had it here around $100 for Bitcoin, went all the way up here towards around 1,200. Major multiple returns around this part of the overall cycle. And not to mention, this is, again, a historic low down here towards the similar range we saw back in 2017 and what we saw back here in June of 2012. But I actually want to focus again on the similarities and the difference in the model variance here and the decline from what we've seen in previous cycles. Let's take a look back here, right? We go back here to June of 2016 where the model variance started to decline, where price was not keeping up with the main line here for the stock to flow, right? We went from 0.439 down here towards negative 0.99. A near 1.4 to 1.5 decline in the variance. Let's take a look back here. April 13th. Went from 1.65 down here towards 0. Similar kind of decay, near that 1.5 metric on the decline of the variance. And then let's take a look at here, right? Where price was right in line with the overall stock to flow. We're at a range of around 0.339 down here towards negative 1. Again, not exactly aligned, but very similar degrees of decline in the model variance. And all at healthy discount points in price, where Bitcoin continued to climb higher. One of my favorite models that, again, is signaling what I think we're seeing right now is the R-HODL ratio. And that is the similarities to the more dramatic sell-offs that we saw back here in 2013. Not exactly in line, right? You can see there's a lot more volatility back here than what we had during this correction. They're just not as small of corrections as 2017 because of the derivatives and leverage that have started to really distort how market price moves. But it will always come back inevitably to where it should be, where the real demand is, once the liquidations are through and once people buy the discount opportunity. We're holding up exactly where we were back here during that midpoint of both cycles, which easily points us towards a realistic assumption that not only crypto market cap is going to climb higher, but that Bitcoin alone has the room to be able to get to 6-digit territory. I'm not going to say it's going to happen overnight. I'm not going to say it's going to take 10 years. I think it's going to happen realistically within about a year's time frame. I think that's a very fair assumption to make. Especially considering that we've gone, just bear in mind, since last August from $10,000 to $43,800 for Bitcoin. Now all we need is slightly above a 2x multiple, a doubling of Bitcoin, a little bit more. And on the sense of total market cap, to reach those heightened figures, right, we're calling for anywhere from around an $8 to $9 trillion valuation for crypto markets, maybe even, heck, a chase up to the $10 billion metric. in order to actually see that we could do something like this, we need to assume that altcoins are going to outpace Bitcoin. And I think Ethereum, conservatively, right, originally doing a 336,959% return, can easily rally towards an even level like 10,000, which would be around an 11,730% return from $80, where it was at back in March of 2020. So crazy to think. So crazy to think it's made these leaps and bounds since then. But this is, again, a conservative estimate. This is assuming that Ethereum will no longer continue to outpace Bitcoin, but will just probably hold with Bitcoin. I don't think that's the case. I think conservatively we can shoot for 10K. But I think what's much more realistic and much more probable is somewhere around the 15K to 20K range. Right? And that's what a lot of people have been calling for. It's not even 1/10 of what we saw back here for Ethereum in the previous cycle. But it's not, again, going to happen overnight. This will take time. It could go all the way into 2023. Right? We get another January altcoin cycle. These are the kind of things that I'm watching for, guys. And again, I don't think anyone has a crystal ball to know exactly how things are going to play out. And I won't preach to you guys as if I do have one. But I will say this. Again, though I know people are sometimes scared of the volatility in crypto, some people get very worried and they want to cash out. Again, maybe it's decent. Maybe it's an important time for you. If you feel like you're stressed about the charts every day, it's probably that you're too invested in this market, or you have other things where you need that money for in your life. And I don't know where you are in your personal financial journey. I don't know what struggles you guys have in your life, or what goals or ambitions you have. Maybe you have enough money and you're like, I'm good, I'm going to go ahead and retire, right? But what I'm trying to focus on is for those of you in this case who have that time preference in mind, who are willing to wait, who realize at the end of the day that there just aren't any other opportunities like this out there. There just isn't. Maybe you nail a single investment on some specific stock, you buy it at the perfect time and it does a 10-20x return. Yeah, maybe you can be a part of the 0.001% that nail that. Or you can play a much safer bet, which is simply investing in an emerging asset class that has infinite possibilities, crazy returns, and has historically proven through price that it's much, much more likely to move up higher and higher and higher over time. I can tell you guys, it's a reason why crypto is my most exposed asset class. I feel confident in this market. I'm invested in liquid assets that I can go sell if I want to tomorrow. I can realize these gains. We just got to make sure we realize them at the right time. Not during peak fear, but through peak euphoria. That's the time where you want to start to liquidate and realize profits. So, anyways, guys, I've rambled on enough today. If you like this video, you can always drop a like. It's one of the best ways you can support the channel. But another way as well, if you guys are interested, is you can always check out the Dash Report. It's a great community. We've got thousands of participants, not only in our discussion group, but outside of that as well, through our alerts, those who are reading the newsletter. We've got all kinds of tools there. I do a coverage of crypto, equities, commodities, and Forex. And not to mention, if you guys are interested in seeing my portfolio allocation for crypto, as well as just getting my up-to-date thoughts on the whole macro scene, it's a great way to learn. It's not too expensive. So if you guys want to check it out, there's a link down below in the description. Again, one of the best ways you guys can support the content we put here on the channel. That being said, have a wonderful day, everyone, and I'll see you all in the next video. Take care, everyone.